beginning of today's video, I'm going to list out a couple different currency pairs to keep an eye out for this week based on economic data releases and compelling edge finder analysis. Based on these two categories, here are 4 pairs to go ahead and take a look at this week. Starting off with GBP CAD. On Tuesday, September 20th, the Statistics of Canada released a variety of month-over-month and year-over-year CPI data for August. On Thursday, September 22nd, the Bank of England is forecast to hike the official bank rate by 50 basis points, issuing a corresponding monetary policy summary as well. The Bank of Canada has been far more hawkish as of late than the Bank of England, so unless there are any bullish surprises, this pair seems to continue its bearish trend. GBP CHF also receives a strong sell signal. Along with the aforementioned Bank of England upcoming monetary policy decision, the Swiss National Bank will also be deciding on a new policy rate on Thursday, September 22nd. The Swiss National Bank is expected to implement a rate hike of 75 basis points, doing away with the precedent of negative interest rates. These expectations have seen this pair fall to historically significant lows, as can be glimpsed on the 1-week time frame above. GBP USD is our third pair to receive a strong sell signal. This pair presents another opportunity to sell the pound since the Federal Reserve will be adjusting the federal funds rate on Wednesday, September 21st, as well as issuing accompanying economic projections and a related statement.
Does this look like you? Most new Forex traders don't have a trading plan and are basically gambling the financial markets. Right now, our team at A1 Trading is doing free one-on-one coaching calls where we're going to answer some of your trading questions and help you out. There's no strings attached. We're going to be going over trading strategies with you. We're going to offer you some free downloadable PDFs, and we'll answer some of your questions that you need help with in your trading. And again, it's free. Click the link wherever it is on the screen right now, schedule a call with one of my team members, and we'll go over some of your trading questions. See you there.
Fed Chair Jerome Powell currently shows no signs of relenting from hawkishness as a 75 basis point rate hike is forecast. With support being tested, we will see whether the Bank of England or the Fed could present a catalyst for a break to the downside. And finally, USD JPY, which receives a buy bias. Along with the upcoming Federal Reserve decision, the Bank of Japan will also make a monetary policy decision this week. If the Bank of Japan continues to keep their policy rate below zero, further abstaining from rate hikes as currently forecasted, this could usher in even more bullish momentum for the pair. Depending on how the Fed's move meets or contrasts with the market expectations, USD JPY could yet again touch or break out above trendline resistance. Moving right along, here are 2 paths for Aussie bears. On Monday, around 9:30 Eastern Time, the Reserve Bank of Australia published their latest round of monetary policy meeting minutes. Because their inflation threat is not nearly as dire as that faced by the US, the UK, and the EU, the Reserve Bank of Australia's basis rate hikes understandably pale in comparison to the Fed and the European Central Bank's 75 basis point hikes, or the Bank of Canada's willingness to utilize a full 100 basis point hike. Here are 2 paths for Aussie bears along with their respective edge finder ratings and categories. Number 1, AUD USD. With big monetary policy decisions and economic projections coming on Wednesday from a hawkish Federal Reserve, there is a chance that significant bearish momentum could be coming. Institutional traders clearly have far more confidence in the US dollar than the Aussie dollar, as per COT data. Number 2, AUD CHF. The Swiss National Bank is expected to implement a 75 basis rate hike on Thursday, officially leaving negative interest rates behind. This marks a hawkish pivot that continues to set apart the Swiss franc as a safe haven currency, and a bonus AUD CAD. Though perhaps less clear than with the 2 aforementioned pairs, the Bank of Canada's approach to contending with inflation contrasts remarkably with the Reserve Bank of Australia, despite both Canadian dollar and Aussie dollar being commodity currencies. Finally, let's wrap up with some shocking Canadian dollar inflation news. Statistics Canada released a surprising new batch of inflation data on Tuesday morning. Month-over-month CPI failed to meet forecasts, declining by 0.3% instead of the anticipated 0.1%. Rather than being an outlier, the other measurements of CPI mostly followed suit, as both year-over-year trimmed CPI and median CPI likewise failed to meet expectations. Trimmed CPI's poor performance, clocking in at a 5.2% increase year-over-year instead of the expected 5.5%, could be interpreted as particularly significant in that it excludes the 40% most volatile prices. This may theoretically set Canadian dollar fundamentals apart from US dollar, in that the Federal Reserve has incentive to keep hiking interest rates due to stubborn core inflation, while the Bank of Canada no longer does. Regardless of your overall Canadian dollar bias, this is shocking CAD inflation news. So here are the best pairs to trade. While there are multiple ways to take this news, I personally have two takeaways. Number one, the US dollar Canadian dollar bullishness now seems more compelling in light of the growing disparity between Canada's inflation problem and the US's inflation problem. And number two, the market reaction to this news could present discounted opportunities to buy the Canadian dollar against less promising currencies. These readings are consistent with the current Edgefinder signals as well, as can be seen with the following pairs. Number one, USD CAD. Price action has just hit a historic resistance zone, with Kettler channels also indicating overbought conditions. Conservative traders may want to wait for a more optimal buying opportunity, though there may be some breathing room left before hitting the upper trend line and top of this resistance zone. Number two, GBP CAD. Price action is currently resisting the depicted zone as resistance and could potentially serve as an optimal selling point. And lastly, NZD CAD. Despite the bearish CAD news and support at 0.79, price action has still been bearish for this pair today. There is also ample room to potentially continue selling off before touching support from the lower trend line.